Okay, guys, let's fucking start the fucking week. What's up here? We're again in the fucking charts, ready to take off, ready to take some trades. Um, we have still 2 weeks left. It's March, so we can't capitalize on a lot of opportunities in the markets, especially at the current market state we are in, as we do have very nice areas which we're gonna talk about now in a few minutes. What I'm gonna do in this first video, as it's gonna be a pre-game plan for the first day of the week in the third week of March. Um, we're getting ready on the higher time frame. I'm gonna give you a quick overview, what to look for, what important areas are, where the liquidity is sitting, what we can expect from a retracement, expansion perspective, structure cycle perspective, liquidity perspective, um, and as well as where the nice opportunities could be sitting at. So let's get into it with not a lot of talking. Now let's start off with the monthly time frame quickly, but we're not gonna stay too long into it, as I think the most important things which we're gonna discuss are the structure cycle, the POIs, the liquidity, and the current position we are sitting at. The current monthly candle hasn't been closing yet, as we have 15 days left to go, but I do think we can already project and confirm some roadmaps where price could go, what we could expect, and where the trades and opportunities could be sitting at. So coming to that structure cycle, firstly we do see that the monthly is bearish, as we have the bearish direction, printing lower lows and lower highs. The moment on we build that liquidity towards the downside, mitigated into the IFC. This caused price to change momentum, as the first demand we mitigate into failed to create a high and therefore broke that low. This break of that low caused a break, a test, engineering liquidity towards the upside, which is very important. And therefore what we can confirm after this change of momentum created a lower low in price, breaking the previous low of the previous bearish leg. On the monthly time frame, we confirm our bearish leg to be from that lower high to that lower low. What is important here, important is to note that extreme supply area we're having here, as well as the below sitting liquidity being that break and that test, which you're gonna mark, and as well the extreme monthly IFC where price already mitigated and rejected from it. Yeah, this is the most important thing from that bearish leg. Coming into the retracement, we do see that the retracement caused the accumulation around about the 50% of the bearish leg, which is normal and which makes a lot of sense, as orders are accumulating, prices entering a range. But the moment on we pushed lower, induced that low, which caused price to expand higher and break that internal high. We can confirm our weekly bullish leg, which is more important than our current bearish monthly leg, as we are getting fractal. You're gonna mark this higher low to that higher high, which is pretty important. And why do you think that the price can come lower? I'm gonna explain it now. Firstly, important to note again is the bullish weekly push, where we do see the price after inducing that low started to print indecision candles after that run of previous days liquidity towards the downside. We ended up having that bullish pressure towards the upside. So confirming our extreme POI, which is sitting here, we're gonna mark that last daily IFC. Sorry, it's a monthly IFC, but as well as refined on the daily IFC, you're gonna refine it later on. But this will be our extreme demand area where price could come to, as a retracement towards the downside. It would make sense to create from there higher highs again. But this is a daily this is a projection which gonna take very long, so it's not that important. But coming into the current position we're in, which is premium, we're sitting at premium from that bullish leg, higher high, high low to that higher high. Price 50% is sitting around here, so we do see that premium. What is very nicely to see on the monthly time frame is the, or let's hop on the weekly. What is very important to see is before we mitigated into that monthly IFC, price started to build liquidity towards the downside, and after having that run of liquidity towards the upside of previous days and weeks highs, as well as the objective we were marking here being the break-in test and the extreme supply area, price ended up melting basically. So after seeing that meltdown, I can confirm that this bearish liquidity cycle, which is being a buildup of liquidity, a inducement, and a mitigation. If you have these three pillars, you do have a liquidity cycle and could expect a very nice expansion towards the liquidity we have built. In that sense, we built that liquidity, induced and mitigated that monthly FC, which caused a very aggressive rejection towards the downside, a few indecision days, and from there on a very aggressive bearish week following up, as well as our previous week being very bearish in that sense. Yeah, so very important to know. Now what I do expect is, as we had that build up of liquidity, that run and that mitigation, that monthly IFC, I do expect a very nice rejection and reaction from that supply area, which we already can see here. So my intentions are basically that we're gonna start retrace towards the downside into the yearly IFC here, which could be a very nice catalyst for price to push higher or give reactions, as well as the very important POI, which is a supply to demand POI. Why I like that POI so much is because we can see price had very nice break up and push lower, which was testing that POI in that sense, and which is for me more so break and test liquidity for price to induce. So having a cycle towards the downside here, inducing that break and test liquidity into that POI would give me a very nice cycle to potentially have very nice buys from here on the higher time frame. But as we're not here yet, I do think we can get any reactions towards the upside, as we had a major inducement on the current market, mitigating into a buyer's sensitivity area, which I do think can give very nice reactions. But looking into the closure of that weekly candle being a very bearish candle, I personally wouldn't jump into buys quickly. I definitely would need development to buy here, as well as we have sitting a very nice buyer sensitivity area here. So to finish up the higher time frame, what is important is that after this higher low, pushing up, breaking structure, testing that first decisional POI, you're gonna mark that decisional POI as price can come lower to that and react from here very nicely. You mark the break and test liquidity and the IFCs which you're having here, and the extreme area we talked about. Firstly, you're gonna as well mark as price could potentially react from here and continue lower to complete efficiency of the pullback and push higher. So you mark these POIs, the liquidity and the current buyer sensitivity areas here, which are very nicely and which we're gonna discuss on the daily. But firstly, to close up the weekly, after such a bearish momentum and rejection towards the downside, breaking H4 structure, the H4 high low, the daily high low, as this was our internal daily bullish leg, we can expect a retracement. But the interesting thing here is to note, when can we expect the retracement? Now, in my opinion, I wouldn't expect and guess the retracement until we have development, because the weekly candle closure was pretty bearish, like being a totally engulfing candle towards the downside, which is giving doubt to any buys. But as well, now this is a position in the market where I would stay out personally, as I do think it's too late to sell and it's too early to buy. At these positions and situations, I would just stay patient and wait for the price to either show development in any of these buyer sensitivity areas, where you then afterwards can expect a deeper retracement towards the upside, or you're gonna wait for price to come higher into any seller sensitivity areas, wait for any liquidity cycle, any cycles, and then sell with the market, where you would be aligned pro trend, as we are currently bearish direction wise on the lower time frame confirmation, what we can also see here on that bullish on that bearish expansion towards the downside. So closing up the weekly candle closure was very bearish. we do want to have development either in that buyer sensitivity areas or after that break in test liquidity into that buyer sensitivity area, which is sitting below that first area, from where we can expect a reaction but not predict and just project, as the price can continue expanding towards the downside, and we do not want to be involved into it until price gives us development. Coming into the daily time frame, what we can see here is, again, we talked about these areas already where we can expect a reaction. Just mark them, they're gonna be pretty important. But coming into the current price action, we do see that after having the break of that H4 higher low, we mitigated into a demand which in theory should be our extreme demand, where we could expect higher highs, as it's a higher low to a higher high, a daily internal bullish leg. But why I didn't expect that, it was a smart money trap in some sense for me, was because of that bearish liquidity cycle which I mentioned, the inducement, the mitigation. So I expected a deeper retracement towards the downside, being the first fact. And the second fact, because I have that weekly bullish push and because I was accumulating in premium, I do think that aligned with that monthly supply area and the bearish liquidity cycle, it makes as well very much sense to retrace into that weekly bullish push into discount areas to then continue and create higher highs. This was my thought process. So coming into the daily time frame, again, we mentioned that first break of that higher low, which caused a very nice range in price, which we can discuss here. The first rejection has been printing here, afterwards following indecision candles, and which is very nicely to see here. After we took the previous week's candle liquidity towards the downside, price printed a bullish engulfing towards the downside. So why I did think that price potentially could have pushed lower after that run of this candle liquidity. So it's pretty simple. The moment on I mark that area as a potential smart money trap because of the mentioned reasons which I already told you. What I do need for a smart money trap to be broke, I need an inducement up in that sense. And the moment on I have the inducement up, I can potentially expect a follow through and expansion towards the downside. Potentially. Why I'm saying potentially? Because this run of this liquidity towards the downside could have pushed price higher. These are probabilities. So in that sense, after that break of that high of the previous day's highs, price expanded towards the downside, giving us that internal bearish last leg, confirming that smart money trap, by the way, which we took out afterwards. So currently on the daily candle, we had taken that major inducement, which has been the high low of our last daily internal bullish leg. We are sitting now after that major inducement in a buyer sensitivity area. Why it's a buyer sensitivity area? It's very simple. After we broke higher, we built liquidity towards the upside. After that inducement, price had a very nice follow through, breaking structure. So a clearly buyer sensitivity areas where we could get reactions. So after having that pattern with the major inducement and the mitigation, we can expect potential retracement towards the downside into firstly on the first supply areas, either here or price reacting from here, continuing higher into that weekly IFC, or maybe into that objective here with the liquidity sitting above. So these are all things which we can't know, but what I can know for now is that I'm not gonna buy today in the London session, because after the major inducement, I do want to have on the M15 structure development, especially because of the closure we're having in the weekly and daily time frame. And I can't know when the expansion is gonna stop. Maybe the price has fulfilled some imbalances towards the upside, what you can see here, and is gonna continue from here lower towards the downside into any other objectives. So I can't know that. Therefore, I'm gonna not buy today probably, and as well not sell, because looking into our last internal bearish leg from that lower high to that lower low, I do want to sell in premium areas. So at least here, price pushing into any objective and giving me any cycle telling me that it's gonna continue lower. What I can see after that break is a pretty nice break and test liquidity sitting here. So with a very nice decisional looking into that, and as well as a very nice extreme IFC on the daily, which has taken liquidity, so pretty nice looking here. So this is what I do see. So closing daily, looking into the H4, these are gonna be our objectives probably. Okay, now we can refine. This has been the break and test liquidity, because after we broke, price tested and continued lower. This is gonna be pretty nice break and test liquidity for price to take out. The decisional candle will be more so this demand to supply area, which you're gonna mark, and as well a pretty nice extreme of the last bearish push, which is sitting at the top and which is being our destination. So from where I can expect sells quickly to continue as we see that last lower high to that lower low, which breaks structure, testing that area in a sense, testing the bearish leg and continue lower. I can expect sells after this run of this structural high or that break and test in that demand to supply POI, or in that extreme supply where I can have selling opportunities towards downside potentially. Looking into buys, I would not buy now, as I do think it's too early, but a run off that low of previous day could push the daily candle to the upside. Like looking into the daily candle again, this, let me delete that, this run here of the previous day's candle liquidity low could push price potentially higher and close bullish. Now, depending on the daily candle closures, I'm gonna adapt in the markets and see if I'm gonna sell or buy, because if I do see now here a run of that low of previous day and the candle closure being pretty bullish, I could expect a fulfillment towards the downside, fulfilling the AFC from that day, to potentially have buys and cycles to buy towards the upside, as we do see it in discount, which you can see here, and the 50% of the bearish leg is gonna be around here, and we do want to come into premium potentially to sell, so that would make sense. But these are all daily projections, which are not that important right now. And yeah, so this is my idea for the session. It's basically to wait and to not trade in any sense. You could potentially take that low of previous day, which price could induce and give any cycle towards the upside. You could buy, but it would be aggressive in my opinion, because of the major inducement, the momentum we were having, the mitigation into the bar sensitivity area, which still hasn't give any development in price action, in current price action. So these are all things to take in consideration. You would be buyers first hand, so if you'd want to do that, you can do that, but I'm not gonna take and risk my capital on that, as I do want high probable trades, more so pro trend trades. So looking into that H4, we have finished. We go into the H1 and just refine some things, marking the structure on the lower time frame, marking the POIs, marking the liquidity we are having, and just react to the market. So, and just project some roadmaps which could occur. If you do want to see that on the lower time frame, which is a bit more complex, which I haven't drawn now here, which I'm gonna do later, you can like and give a subscribe and a comment, and I'm gonna do that for you every day. I just did a small top-down analysis, what I could expect now from these bar sensitivity areas. As I mentioned, maybe a reaction, a continuation from the supply areas, a high reaction towards the upside to then push lower, or we could come into that lower areas to then push price higher. So and at the current position we're in and the current price action, as mentioned before, we do want development, two bullish legs of structure. If we run that liquidity, we see some development. we could potentially buy into these supply areas and these liquidity areas here. But I'm not gonna go that deep in that, as I do want still to not give any or all informations I'm having onto YouTube until people really want to see it. So that's it. I hope you enjoyed.